Coming up on Market to Market. Spring is just around the corner, but winter continues its assault on America. And frigid relations with Cuba thaw, sweetening prospects for expanded trade. Those stories and market analysis with Naomi Bloom next.
Funding for Market to Market is provided by Grinnell Mutual. You think differently about a customer when you stand in the middle of his dreams. We work to make sure you get covered right. Grinnell Mutual, a policy of working together. Information on finding an agent near you is available at grinnellmutual.com. And by Sukup Manufacturing Company, offering a full line of grain drying and storage equipment and steel buildings. Sukup Manufacturing is on a mission to protect and preserve your crop and the tools that produce it. This is the Friday, March 6th edition of Market to Market, the weekly journal of rural America.
Hello, I'm Mike Pearson. A surge of hiring last month underscores the confidence of American businesses. The Labor Department reported Friday that employers added 295,000 workers to their payrolls in February. The U.S. unemployment rate fell 0.2 of a point to a 6.5-year low of 5.5%. However, average hourly wages rose just 3 cents to $24.78 per hour. Over the past year, hourly pay has only risen 2%, barely ahead of inflation. Equity investors typically would have cheered such an upbeat report, but Wall Street headed south on concerns that the Fed will raise interest rates from historic lows as early as June. And the government reported late this week that America's cavernous trade deficit narrowed by more than 8% in January as both exports and imports declined. Agriculture, of course, is highly sensitive to trade policy. And this week, representatives of nearly 100 U.S. companies traveled to Cuba to rekindle their relationships with the former Cold War antagonist. Less than 3 months after President Obama announced plans to restore full diplomatic relations with Cuba, the business sector is actively sniffing out avenues of commerce between the former adversaries.
We think that there's good possibility with as trade opens up and as tourism opens up, a good market for a lot of our product, as well as I said, the things that we can do to help their industry domestically look good as well.
The U.S. Agriculture Coalition for Cuba, made up of 95 different companies and organizations, has pressed Congress to lift the trade embargo against Cuba, opening a new market for goods and products from America.
Well, I must say it's a unique place that has a lot of opportunity.
Delegates toured the communist island nation some 90 miles off the coast of Florida this week, catching a glimpse of a sugarcane processing operation. Sugar is a leading Cuban export and a crucial part of the nation's economic past. Cuba's sugar industry was once the island's main source of foreign currency, used to barter for goods and services. Few commodities in the Western Hemisphere may be as wrapped up in layers of politics and policy as sugar. When the Cuban Revolution brought Fidel Castro to power in 1959, the dictator seized control of all U.S. agricultural operations on the island. According to USDA, the U.S. farmed 75% of the arable land in Cuba at the time of the 1960 embargo. Subsequent outcry from sugar lobbyists may have led to policies that added confusion to an already complicated system of quotas and subsidies designed to benefit the U.S. sugar industry. And while the majority of domestic raw sugar is actually derived from sugar beets, sugar cane is an important crop in Florida, Louisiana, Hawaii, and Texas. But even as additional markets for sweeteners are poised to materialize, the commodity increasingly falls into the crosshairs of public health advocates.
The new WHO guidelines refer to free sugars, that are the sugars added by the cook or by the manufacturers in the production of food, but are also naturally present in fruit juices and in fruit juice concentrates. These are not the sugars that are naturally present in fruit, vegetables, or in milk.
The World Health Organization sounded the alarm this week, saying people all over the world consume too much sugar. According to the WHO, U.S. adults get about 11 to 15% of their calories from sugar. The figure for children is about 16%. Following a year of consultations, the WHO says Americans should slash their sugar intake to just 5 to 10% of their overall calories. For years, experts have warned against the dangers of sugar. Studies suggest that people who eat large amounts of the sweet stuff are at a higher risk of dying prematurely from heart problems and other maladies.
There's a lot of sugar that goes into all sorts of products, like bread, which you wouldn't think should be there and doesn't need to be there. So generally speaking, if it's to preserve people's health, then why not?
Despite health and political controversy, corn, rice, and poultry producers have benefited from agricultural exports to Cuba since 2001. A defrost of sorts opened limited markets to the former Cold War foe, and USDA estimates that nearly $350 million of U.S. farm goods were exported to Cuba in 2013. But loose ends will have to be corrected before exporters can begin competing for expanded Cuban markets. And prospective buyers and sellers claim Cuba's cash-only system of transactions with the United States is in dire need of reform. March definitely came in like a lion in much of the United States, and even though the forecast calls for drier conditions and milder temperatures in the Midwest, many folks in the East have a hard time believing that March will go out like a lamb. For the third consecutive year, spring planting in some parts of the Ohio Valley is expected to be delayed due to soggy conditions. And once again this week, a massive snowstorm raced across the Atlantic seaboard. Winter refuses to loosen its icy grip on much of America. This week, another massive storm is dropping freezing rain and up to 20 inches of snow from Texas to New England. In Maine, ice more than a foot thick is complicating life for people who make their living on the water. Lobster fishermen, who only last year enjoyed a record-breaking catch worth more than $450 million, are now confined to the harbor because it's simply too dangerous to go out to sea.
Mostly because it's blowing, but also because of the cold. You know, they don't want to go when it's this cold. And their gear is all offshore, so it really takes a lot of effort to get off there. And when it's cold, it ices up their boats, and it's just dangerous.
United States Coast Guard icebreakers are present on the Hudson River, working to keep the shipping lanes open for commerce.
We are keeping the track in the ice as soft as possible so that barges carrying home heating oil, gasoline, jet fuels, and other vital products can make it to terminals and eventually consumers throughout the Northeast.
On Nantucket, some waves actually froze as the cold temps changed the ocean water to the consistency of slush. The 1,000-mile-long storm stretched all the way from Texas to New England. A state of emergency was declared in Kentucky as parts of the Bluegrass State were blanketed by nearly 2 feet of snow.
Pretty nutty for March, I can tell you that. Generally, you expect the trees to be blooming here pretty soon, but not with a foot of snow on the ground.
With 8.5 feet of record-setting snow on the ground, one Bostonian is trying to turn the mountains of snow into a cash crop.
We'll ship historic Boston snow to anywhere in the United States because our nightmare is your dream.
But there is light at the end of the tunnel. Forecasters are calling this storm the last of the season. And after a few more days of cold weather, sunny skies and warmer temperatures lie ahead.
Next, the market-to-market report.
Grain prices declined this week as the U.S. dollar soared to an 11.5-year high. For the week, May wheat lost 31 cents, while the nearby corn contract moved 7 cents lower. Soybeans also were pressured as the May contract declined by 47 cents. Nearby meal prices followed suit with a downward move of nearly $15 per ton. In the softs, cotton gave back all of its recent gains as the May contract lost $1.96 per hundredweight. Over in the dairy parlor, April Class 3 milk futures were off 43 cents. Livestock prices were mixed as the April cattle contract gained $2.95. Nearby feeders advanced by a whopping $8.25, and the April lean hog contract lost $1.35. In the currency market, the euro plunged 34 basis points against a U.S. dollar on steroids. Crude oil rallied early in the week, but settled Friday with a loss of 15 cents per barrel. COMEX gold declined by nearly $50 per ounce, and the Goldman Sachs Commodity Index lost 10 points to settle at 409.25. Here now to lend us her insight on these and other trends is one of our regular market analysts, Naomi Blohm. Naomi, welcome back.
Hi, thanks, Mike.
Well, let's jump right in. The U.S. dollar is blasting through all of these levels. Does it look like that's going to turn down anytime soon or stabilize?
The thought is that it's going to continue to work a little higher in the short term and then start to stabilize and trade sideways. We're not looking to see any reprieve in the recent action just because of how the U.S. economy is improving truly overall. And so that's what's keeping that dollar well supported. So again, good for the economy, of course, not so great for our commodities, though. Of course, that really affects our export market, and we're already seeing that this week.
And that was leading us right into the wheat discussion. Was this week's big sell-off in wheat, how much of that could be tied directly to the dollar, in your opinion?
I would say at least half of the mark lower is because of that. The market had some decent news earlier in the week that the crop out west was faring well. The good to excellent category in Oklahoma and Texas. In Kansas is 45% good to excellent, kind of as the average, and even in Nebraska it's over 65% good to excellent. So when the market heard that news that there's not any disaster with any cold winter snaps or things like that, that weighed on market along with the dollar being so strong, and we were at that critical $5 support level on the daily charts, and we just fell through it. And unfortunately, the downside looks to be 450, and I never thought we would see that. I thought we would hang in there, but still, competitively against the rest of the world, we're a little too high priced, and especially it's that dollar that's making that all happen.
Looking at the downside being 450, should producers be looking to make some sales here, lock something in if they need to?
I would only do it if you need the cash flow. Otherwise, when we get down to those lower levels, we'll see the demand pick up. And then that'll be, my opinion, the conjunction with some sort of a spring bounce from the grain markets, from corn and beans too. So only if you need the cash flow. All
right. Well, let's jump into the corn market. We were finished the week off about 7 cents in the nearby contract. But what's happening there in that old crop corn?
Corn is really doing a good job of hanging in there for now, but my fear is that we're going to see it succumb to peer pressure because of the beans and the wheat working lower. We just don't have a lot of fresh news. We had decent export numbers this week, but that's not enough to sustain it because the thought is that we're still too high priced compared to Ukraine. There was talk today that Ukraine actually got a big shipment secured to China. So that weighed on the market too. And a lot of times, the next upcoming USDA report out on Tuesday, the regular monthly supply and demand report, in the middle of March, it's a dud. Doesn't really tell us a lot of fresh news. So unfortunately, my thought is that the path of least resistance just in the next 3 weeks is going to be a little bit lower. And there's a head and shoulders formation on the daily chart, which actually points to retesting the lows from fall. And I'm kind of surprised by that. It is about a 25 to 30 cent washout lower just in the short term. But I do think then that's it.
Retesting all the way back down to those that October 1st low down in there.
Yeah.
Okay, so that would be a pretty good sized move to the downward side.
Right, but you know what? I think that's just the short-term thing because then that March 31st report I think is going to turn everything around, and then that's going to be our bottom for the spring. Okay,
and now talking on the new crop corn, we had a question here from one of our followers on Twitter, so you can follow us at Market to Market on Twitter or on Facebook, and this is from WTMCC, and they're curious, does cash corn for fall delivery offer enough reward to sell with this wet, cool spring and summer ahead?
That's a really good question, and I would say if you haven't had anything to get started with, it's probably prudent to get started because the basis levels are still kind of attractive for a lot of the Midwest, even out that far. And in the short term, we might see that new crop price slip a little bit lower too, but at the same time, because of how the math is going to work with the spring acreage, and when you come off a year where you have record yield, history tells us that you don't get that record yield the next year. And if you plug in just even like 1.5 million less acres planted than last year and 158 yield, which is fantastic, it actually puts the carryout level down to 1.2 billion bushels, and that's a whole new ball game. So I would say if you do it, I get it for getting started, but but I do feel that longer term, with the weather issues that still could come yet this spring and summer, that we have every reason to see this market come right back.
And now this last week, I believe it was on Thursday or Friday, also it was announced that we have entered a period of El Nino. It was announced, and a weak El Nino, I believe they're saying so far, but that could lead to better weather prospects in the Midwest.
Yeah, so all those things to keep an eye on, and we'll see. There's just too much uncertainty yet to know for sure which way we're going to go, but in the short term, a little lower.
There does seem to be some certainty in the bean markets, at least here this week, and it hasn't been uncertainty that's been favorable for the producer. Saw almost a 50-cent sell-off. Is it all truck strike related in Brazil? Is that what really moved this market lower?
Well, that truck strike in Brazil was helpful to get the market to kind of wake up for a little bit. So it did two things, where it was that little bit of a rumor to get the market spurred a little higher, but then nothing came of it, and so everything starts to slide a little lower. And because of just that huge supply that we have globally, and with the South American harvest progressing, and with China coming out to say that they're going to be buying from them, it just really weighs on the market sentiment overall. And the only thing that I think can really turn the bean market around in the shorter term, I do feel that, like corn, it's probably going to slide a little lower here over the next 3 weeks because we've got nothing to talk about, would be what the March 31st planting intentions report says, because a lot of people in the Dakotas and Minnesota, Wisconsin, Michigan have told us that, they're not just doing the corn bean rotation thing, they are reintroducing things like wheat or things like veggie crops and sugar beets. And I even heard sunflower seeds, and I hadn't heard that in a long time. So I'm very curious to see how many acres the beans actually have going forward, and I don't know that it's going to be as bearish as what everybody is saying, because those outlying areas are going back to some of their more historically traditional crops.
Now, we're a long way out from that March 31st report, but has the market decided on what it expects for bean acreage yet? Do we have any number that we're starting to trade for that report, do you think?
The industry is expecting doom and gloom, but the USDA Outlook Forum had suggested that it's going to be about as unchanged as last year. So to me, that just really says there is true uncertainty, and we have to wait and see.
All right. Well, now I want to jump into the protein markets, and to begin, let's talk the dairy market. We saw a little bit of a sell-off this week, but the dairy has been holding in here in the mid-teens. What do you think this thing looks like going forward?
Well, going forward, I think we stay right around here at the cost of production. So what we had happen was, that big rally we had last year, and then as we had said all along, it's just a demand thing right now. And so once the demand stopped, everything fell apart. But then just a few weeks ago, then the Frontiera global export market, they said that they thought New Zealand production was going to be down 3.3%, and anything over 1% in the milk world is a big deal. So that's what got that market to turn around back higher. But here's the thing, we still have all of this supply. The United States is so full of supply of not just milk, but cheese, butter, whey, powder, all of those types of things. And even just this week, we had a report where cheese production was up 2% year over year from last January. So it's still a thing where the supply, we have to work through it, and it's helping that now it's getting dry again in New Zealand. But because of the market really trying to figure out where the balance is at, we just probably trade stable and sideways near cost of production probably for the next month.
All right. Now, looking at the supply side, we do still have very, very high prices for market cows heading into the slaughter facilities. Is that helping to reduce America's dairy herd at all?
No, we actually have a record number of cows.
Okay, so they're keeping them in production.
They are.
All right. Well, as we're talking cattle, we jump down to the livestock pits. Live cattle up this week, up almost $3. Have we found a floor, do you think?
That's a great question. The traders are hoping that that's what it is. They're putting a pretty big gamble in it. The market had for 2 months just been trading sideways and just really hoping to find a bottom. And so all of a sudden this week they said, all right, this is the week where we're going to go for it. Let's see if we can get through that overhead resistance area. And we got through it just a little bit today, but we'd need some news to really give it some substantial upside, and I don't know that we're going to have it. So my thought would be, unless the sunshine comes out in glorious amounts all over the country next week and people fire up those grills, and I do think that they would go to steak first. Unless we have something like that, we're probably going to see that market just slip back a little bit, but continue in that sideways trading range, because trade is really aware, of course, that the supply is still down and you can't just rebuild a herd overnight. So I think that keeps us supported for now, and I would be curious if we can actually work higher or not, like a lot of the trade is hoping for.
Now, in this past week, there was not a whole lot of cash cattle traded, I believe.
No, it was a really quiet week, really quiet for everything. So it was all technical action.
All right,
Yeah.
so we'll see what this next week brings. Now, moving into feeder cattle, that was the most action in any of the pits, I believe, this week, up $8.25. Where does this thing go from here, Naomi?
That's what we're all trying to figure out, Mike, and I'm not sure is just the flat out answer. A lot of, again, there are technical buying there too. Some people thinking that seasonally maybe it was time to make that market move a little bit too, but I don't know. And so that's just my fair and honest answer. Hooray that it worked its way higher, but we'll see if the live cattle can actually follow suit with it. And of course, all of that depends on the demand and then keeping an eye on what the other protein prices are doing too.
Now, in that feeder cattle market, are there technical levels that folks should be keeping an eye on, or is that thinly traded enough that it just kind of goes where it wants?
Oh, it depends on the week. Some weeks it feels like there's enough volume in it, but with the big limit moves that it's been having lately, it seems like the volume isn't quite what it could be because people are scared to be in it. So again, I'm sorry to take the cop-out answer, but I'm just not sure.
All right. Well, let's jump down and look at this hog market. We saw despite fat cattle being up, the hog market declined a little bit over $1. What is this market doing?
It's really trying to figure out how much supply is out there right now, and I think that the supply is more than what people have thought it could be. The cutout values this week, the wholesale values were down 69.01, and that was like 30% lower than a year ago. And so part of it you can blame the dollar being higher, part of it you can blame that whole West Coast port strike, but I think the bigger thing is that the grocery stores are backlogged with supply because of that winter storm that just would not let up. And then another winter storm came in and would not let up. So people have not been able to get out and buy like they would, and in those places they are not even going to restaurants. So I think that's the bigger part of why the hog market has just been trading sideways and holding. We did see a bullish key reversal on the April chart, so that provided a little bit of hope, but there's no news to justify it to actually go any higher. I don't think it's going to fall apart lower. I think we've priced in about as much negative as we can. One little glimmer that the traders are hoping for, though, is some USDA news that suggested that between first quarter and second quarter production, we would see the pork value, the pork production overall drop 395 million pounds. And that's what I said too. I'm a little confused as to, where those numbers are coming from, because if you look at the slaughter numbers, strong and the weights are still really high. So the traders are keeping that in the back of their heads because that would justify seasonally why hogs do have a tendency to work a little bit higher this time of year. But we have to see it yet in the slaughter numbers. So I think that's what the trade is going to be watching really closely over the next 2 weeks. And in the meantime, we just trade sideways and wait and see.
With maybe some opportunity both with that number from the USDA and maybe some pent-up demand from folks who just haven't been able to get to the grocery store or to a restaurant.
Right. So those are things in the short term that actually might improve some of those wholesale values and get the market to work a little higher. So we need Mother Nature to cooperate so we can get those grills going.
So maybe in this next week.
I think so.
Well, thank you so much, Naomi, for joining us this week.
You're welcome.
That wraps up this edition of Market to Market. But you can find additional market analysis as well as streaming video of our program, all free, at our website. Now, we want to remind you again that Market to Market may be airing in different time slots and in some cases even on different channels next week due to PBS fundraising activities. We do encourage you to check your local listings for details. And if you value programs like Market to Market, please consider making a pledge to invest in a service providing you with accurate information and timely market analysis. We do appreciate your support. And until next time, thanks for watching. I'm Mike Pearson. Have a great week.
Market to Market is a production of Iowa Public Television, which is solely responsible for its content. Funding for Market to Market is provided by Grinnell Mutual. You think differently about a customer when you stand in the middle of his dreams. We work to make sure you get covered right. Grinnell Mutual, a policy of working together. Information on finding an agent near you is available at grinnellmutual.com. And by Sukup Manufacturing Company. Offering a full line of grain drying and storage equipment and steel buildings, Sukup Manufacturing is on a mission to protect and preserve your crop and the tools that produce it.